Trump presidency could propel Bitcoin to $125,000, Harris to $75,000, Standard Chartered. Bitcoin Donald Trump U.S. election. Although a Harris presidency may initially set the market back, both candidates are expected to lead Bitcoin to new highs. Last updated September 12th, 2024 at 1849 GMT3. Junior content creator Harvey Hunter, junior content creator Harvey Hunter. About author Harvey Hunter is a junior content creator at cryptonews.com. With a background in computer science, and mathematics, he seamlessly transitioned from tech geek to crypto journalist. Author profile share. Copied last updated September 12th, 2024 at 1849 GMT3. Why trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our long-standing presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews. Bitcoin is expected to end the year at new all-time highs, regardless of who wins the U.S. election, according to investment bank Standard Chartered analyst Jeff Kendrick. In a September 12th Standard Chartered report, Kendrick suggested that Bitcoin could reach new all-time highs by the end of 2024 due to positive drivers dominating regardless of the election outcome. He stated, "I think Bitcoin ends the year higher at new all-time highs no matter who wins the U.S. election, with a Trump win taking it to and 0,000 if it's Harris." Kendrick also noted that the U.S. presidential election's impact on Bitcoin's future trajectory matters less than it did when Joe Biden was the Democratic candidate. Trump against Harris. How does the election impact Bitcoin? Notably, former President Donald Trump's stance on cryptocurrencies has evolved over time. Despite previously criticizing Bitcoin as a scam, he has recently changed his tune. Trump had previously criticized the Biden administration for its harsh stance on Bitcoin and cryptocurrencies, instead advocating to make the U.S. the global crypto capital if reelected. He has continued to support the sector, most recently endorsing his son's upcoming crypto platform, World Liberty Financial. Meanwhile, critics argue that Vice President Kamala Harris's affiliation with the current Biden administration may harm her relationship with the crypto community. Kendrick cited this as a factor that would likely trigger an initial price decline if she were elected. However, reports suggest that Vice President Kamala Harris could be more open to digital assets than her predecessor, Joe Biden, though she has yet to release a formal policy framework on the matter. Kendrick cited this as grounds for optimism, advising investors to expect dips to be bought as the market recognizes that progress on the regulatory front will still be forthcoming and as other positive drivers take hold. Currently, Kamala Harris and Trump are now deadlocked at 49% odds on Polymarket as bettors try to forecast the next U.S. president. Key drivers: what will push Bitcoin to new highs? Kendrick pointed to progress on relaxing regulations as a significant positive factor for Bitcoin's price growth. Specifically, the repeal of SAB 121, which imposes stringent accounting rules on banks' digital asset holdings, is expected to continue no matter who is in the White House, with progress taking longer under a Harris presidency. A re-steepening of the U.S. Treasury curve is also building positive momentum for Bitcoin, the report noted. Meanwhile, Standard Chartered analyst added that he expects a seasonal rebound in spot Bitcoin, exchange-traded funds ETFs inflows in October. This all accumulates into what is expected to be a monumental quarter for Bitcoin as it pushes to surpass its past high of $73,750.07, a sentiment shared among other analysts. Follow us on Google News.